Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar hits more turbulence as the week kicks off into a whipsaw price action after a bold move by the US Federal Reserve and hit the emergency button for the second time at the weekend and announced they would drop in its benchmark interest rate to zero and launching a new round of quantitative easing. In contrast, in a surprising move earlier this morning, the Reserve Bank of New Zealand cut its rates by 0.75% to 0.25, an all-time low. Now that will be in place for 12 months. Looking back to the RBA now, pressure is on to see whether we see another cut, which likely could be seen in April, or will the RBA take drastic measures like the other central banks and cut in before? So we have to see how that all plays out. From a technical point though, my forecast holds to 60 cents and reassess from there. If we do take out the March 2009 lows, then we could be looking down towards 58 or lower to 56 cents. The reason behind that is the trend is picking up once again. This is a monthly chart, and therefore I'm looking for the broader picture, because as the market is trading, the range is right across the board, not just for the Aussie, but every other market is widening out. So the support at the moment for the Aussie is at 60, 35, 75. Then beneath that, the range or the support level is at 59, 55, 75. So as you can see, they are broadening out because we're getting such wide moves, and trading to this high volatility does bring a high risk. So do make sure when it comes to your risk management that you are very close in terms of how the market you perceive gets to these levels, and work out an assessment before putting the trade on. Looking to the top side, resistance is seen at the moment at 61, 65 to 85, even though we have seen a high of 77. Looking at the euro, very whipsaw price action after the Fed, as I mentioned, hit the emergency button for the second time and dropped their rates. When it comes to the technical picture, we've seen a break of 112, three now rejections of close to that level of 110, and we're now locked in parameters seen at 110 to 112 as we trade around 111 at present. It is assessed that the bears may actually defend this level of 112 again, but the parameters have widened that to 110 to 112, and inside that to 110.45 to 111.45. And no doubt there will be continuous noise as the market tries to assess. But from a technical point though, it is interesting to see that the dailies are swaying more so to the bear case, as we've seen 5 of these candles since the rejection of 115. So let's see how it plays into the start of the week. All eyes turn to the Bank of Japan after the calling for an emergency meeting, which is out very soon. So keep an eye on that. I'm going to broaden my picture also when it comes to dollar yen. As you can see, we're locked in a 101 to a 108.5 range after rejecting at 108.60. The immediate levels are 105.70 to 107.80, 90. And at this stage, it's very hard to give a call, although the market is swaying slightly bullish. But until we get a break above 108.60, could see a pullback. Sterling has crushed supports all the way down, and now, after taking out the level of 124, exposes the region of 120 to 121. I still hold a bearish view and could reach the 120 level, so keep an eye on that. Dollar CAD, still little to gain in terms of the view. At the present is neutral due to the fact is that the uncertainty to oil and also to where we are at the moment. Finishing up with gold and oil, well, the markets are very much in whipsaw price action when we look at gold. After taking out the level of 1,500, dropped down to 1,505 and rebounded. The parameters are getting very wide, so do be very careful when trading gold, as the market will be very whipsawed, as we've already seen a range today of 24 to 75 and slightly weaker again. So at the moment, I hold a neutral view due to the fact is there is no trend when we look at the weekly. So I need a little bit more assessment when it comes to the call at the moment. and also an outside range week is a little bit concerning, but due to the volatility, the market could be slightly over-exaggerating its sell-off and could see a rebound very, very soon. The weakness has dropped further since the break above $35 a barrel and failed. I am looking for the support now at $30 a barrel and beneath that crucial level, which is seen at 27.4070. The market continues to pressure the downside due to the uncertainty to the coronavirus and also the economic fallout that may be seen from the figures that we're expecting out very soon today and into this week. So do keep an eye on those if you're trading oil. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the day and to this new week.